your education and background, you got a lot of background in finance and accounting and both education and your corporate background. So how did that play into, or expand a little bit how that played into your investing career?
Yeah. So as I mentioned, I'm an undergraduate accounting information systems, MBA in finance, CPA, et cetera, et cetera. And that means nothing for real estate other than I took a bunch of tests in life. But having worked in the corporate world for a long time and been a finance person at heart, finance people I always say are risk adverse to begin with. They say no 4 out of 5 times, um, as compared to the marketing mindset that says yes 6 out of 5 times. Uh, and I'm not picking on my marketing friends, but I am a little bit. So I'm risk adverse to begin with, and I'm analytical in nature. So my wife gives me a hard time. She goes, just go spend some time in your spreadsheets and enjoy yourself. Uh, and there's some truth to that, that I am the analytical type that likes to understand that. But I think that's truly a detriment, and starting out, because, you know, I always say you may have heard the illustration of ready, aim, fire. So I'm ready, aim, 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 and then fire until I got through it once or twice. And I think I'm much more comfortable with the risk profile now and the variables that I need to understand to make an investment decision. But you get your engineers, your IT technical types, your finance accounting types, and I'm not disrespecting any of them, but they all tend to be very analytical in nature, and that's what their education has taught them. And so they want to fully understand every risk before they invest in it. But I think it's back to the 90-20 rule or 80-20 rule, whatever you want to call it, that if you understand 80% of it, you're probably good enough to go. Just don't spend your last $50,000 on an investment. Make sure it's disposable income.
I think
But
that's where teams come into play. So standalone, someone who's heavy analytical like you are, and yeah, so they tend to move slower, maybe risk or miss opportunities, which that has opportunity risk, right? Opportunity cost risk, versus someone who's on the complete opposite spectrum, who's go, 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 makes a huge mess, maybe wins at the end, probably got a lot of bumps and bruises on the end. But when you combine those two into a team like that
yes,
balance each other out, that's where a rock solid like CFO and an operator, especially if you have an operator, CFO, and a visionary, all three combined, like that's what you see in some of the most successful businesses and teams, and how you have companies grow from 0 to 500 in a couple of years.
well, you hit it on the head. You hit it on the head, and I think as there's your audiences out there listening, when I talk to people about building teams, you don't want to find people that are just like you. So I don't want to attract other analyticals, although that's probably the place where it starts, and I can build a conversation and with other analyticals easier than I can a marketing type. But some of my best partners, as you said, have been the marketing types, where they're the visionaries and I'm the analytical type. And if you throw in a third person with an operating history there, I think you hit it on the head. You're dynamite. And those are what your audiences should be looking for, somebody to complement your own skills wherever you
Yeah.
are.
And I'm a weird breed because I'm both. I'm definitely very much a visionary. I can operate, but I'm also analytical. And it's weird. I've got this, and I pulled myself all the time. I can get bogged down in details, but then in complete other situations, I don't care about the details. Give me the bulletproofs, the bullet points. Give me the highlights. Like once you start going into details, like I'm tuned out. Like, but I'll nerd out on weird things. Like something will come on TikTok or whatever, and they're like, boom. The next thing I'm learning about is, I don't know, black holes and quantum physics and whatnot, and I'll spend like the next 45 minutes learning about things I can even pronounce. So I don't know. It's weird. I don't know.
But I
I'm a
think
weird breed.
no, you're not weird. You're called a generalist. And I don't know if you've ever taken any personality test, Myers-Briggs or others.
Yep.
You should, people should do that for themselves. They can do them online, easy today. But I was just going to say I think in my own area, I'm very analytical and very detailed. on the first investment when I go with a new group or a new market, but I also conversely have on the limited partnership. I don't do this with other people's money, but in my own money, if a guy that I've known and I've done 4 or 5 deals with calls me, I don't even look at it anymore. If I've got spendable cash, it just goes in there because I know, like, and trust the group or the person. And, that's where I think everybody wants to get to, where you really trust them. And the guy, I'm thinking of 2 particular that haven't done me wrong in 10 years and return very handsome returns to me. And so I'm not nerding out on those at all. But conversely, I'm looking at a new group in Phoenix right now in a deal, and I'm turning over every rock that I can, including getting on a plane and going there and driving the comps and talking to the property management company and et cetera, et cetera.